Okay, hi there traders. I'll get up and running just a moment. Just checking, being the first time back for the stream for a little while. Just checking everything's working okay. Trying to get my headphones going and they're all still on holiday. Bits and pieces. Let's just go to that link. I'm just checking the actual alert itself. I need to just have a restricted mode. Yeah. Hey Pete, how you going? Is everything coming up on your end well? Okay. I'm pretty sure it's working okay. I just I couldn't get up on my mobile just to check the stream coming through. I must have my phone set to restricted or my YouTube account. I'm not sure all these things work. I've got two kids that tend to get on it, so I've got to restrict it. And I've got a feeling that's blocking me from seeing it. All good. All right. We're going to be confident it's going through all right. Hope you're good, mate. Hope you had a good new year. And everyone else listening, hope you all had a good new year, a good break. Been a bit of action over the break, actually. Been quite a bit of action, especially in the US. Well, all in the US, really. COVID cases still kicking off, especially in the US and Europe. Has it started? Yes, it has, mate. Yep. Just let me know if you can hear me clear. Pretty sure it all's coming through okay. Can't hear. Okay. Um, Sound is good, Pete. Right. It's okay. Just see if anyone else having problems with the sound. I think we're good. Everything looks normal on my end. I think Pete can hear me okay. Maybe just log off and on again if you can't. All right, so loud and clear. Good. Okay, so it's not me. That's all I'm concerned about. All right. So welcome to Trade Setup, and it's the first live stream for 2021. And like I said, quite a bit's happened in the US. We had the elections, all the kerfuffle that went on with Trump, and chucking his little tanties, as my kids would say, chucking a tanty, not wanting to leave office, and just the stupidity that's going on over there at the moment, which is all in all, the market's weathered pretty well. I think the market was just baking in stimulus. I'm just sort of waiting for that stimulus package to come through once the Democrats got the all clear, and they did. But it seems to be that look, it could be one of two things. People just not quite. A lot of traders probably baking in a bit too much stimulus than what they thought. So I think that's what we've seen, a bit of a pullback the last couple of days, but not so much, all negativity coming into the market. And the news will start to say, and you can read it anyway. The news saying about not getting the package, it's a risk-off tone. Da, da, da. Well, it is. Gold's not seeing any appreciation because of a safe haven asset that's actually coming down with the US dollar. So it's moving in tangent, like the Aussie, Euro, and that moving down as US dollars rallying up. You've got bonds which actually the yields, which are important, yields gave back some of the previous gains, meaning the bonds rallied, and that could be a safe haven, but it's not out of control at all. And the US dollar is not out of control. It's more of, to me, a bit of risk off in the US dollar trade, US dollar short. But if you go and read, I think the US dollar shorts, the number of shorts has really started to load up again. So if that's the case, there's more depreciation that we could be looking for down the track, meaning that it's a bit of a pullback, drag in some longs and squeeze them straight back out again on a rally. But we'll look at that in a minute. So anyone that hasn't been here before, welcome. And just remember the general advice warning, we don't give specific advice at all. It's just my personal opinions and bits and pieces that I like to bang on about and try to get you to believe. Sorry, my wife's stealing my money. That's great. Should have got her to say hi. All right, so we've got and if you haven't already linked into us at Twitter, You see the top left-hand corner on the screen and Facebook the top right. Bottom right-hand corner, if you go to that's our YouTube channel, there's a whole bunch of material in there to take a look at. And if you can, it'd be great if you can leave us a follow and leave us a like if there's anything that you do like, and feel free to leave us some comments if you do or don't like it even. But if you don't know one answer, I'll just delete them. I'll be honest. All right, let's get into it. So the market's down 53. Just had to with a nosedive since I've been preparing for this last half an hour or so. I'd say that's probably because the Hang Seng's open head south a bit. Let me just so you should see the right hand side of the screen okay, as long as you can see, downhill the numbers on the bottom, the right hand side and the bottom, the axes essentially should be good to go. So we'll start off with, actually, I'll get off on TradingView. I've got everything loaded up there. So I'll start off with the XJO. This is what I was looking at. I was looking at that bit of a pop-up, which we did get that, and now we come straight back down to this support. We might just be retesting support at 66.57. You see that momentum's really coming off. We have swung, sort of that oversold level on the stochastics, which I like to see, and I don't really want to see momentum kicking off too hard to the downside, because we start to break that. We've got this range in here that we're starting to bang it around in. The last few days, which we couldn't get through 67.50. We started to stall up here, which you see. So that's the level I've got my eye on. This inside level, I thought, okay, may provide some sort of a bounce. It pushed through there and did bounce off there eventually, bounced off the lows at 66.57. And we're back down there now. So all in all, I think there's quite a bit you can attribute to the US holidays. We beat the US to the punch. On Friday, we unwound, and we're unwinding again today. So we've beaten to the punch with a sell-off on Friday, and they sold off. And I don't think we're following them as such. When we get up to these highs and you've got a US holiday coming in, that they're not going to be open for a couple of days. There is always that kind of thing, brings a bit of risk off into the market, and especially after traded through that into that zone a couple of times, it's finding resistance. Okay, we sold off, we got back up there again, we sold off again. So for me, I would be surprised if we get through that 57 today. We're only a few points off there. We might flush it and bounce into the close. You still got a few hours into this session here, and then US is closed tonight. US stock market's closed tonight. Futures will be open for a while. What have they got? Was it Martin Luther King Day, I think? And then I'm not sure, but is the inauguration tomorrow, US time, meaning we'll see that on Wednesday. I'm not sure. Anyway, they've got a bit going on. Public holiday, long weekend, and then the inauguration, a bit of action that could come in there. I hate to think so, but the way the US is at the moment, you never discount anything. So yeah, I still, and I think longer term we've got support. I would expect to come in, down at 89. Just get rid of that. Down at 89, which is down here. So that's the 30-minute chart. Don't forget. And you can see we had that bit of a rally, started to stall, and potentially. I would have thought this higher low, I'm still banking on that holding up as a higher low, and see if we can push back up through 67.50. Look, if not, so be it. I think it's all going to link into what we'll talk about in a second, is the US dollar. Bit of an unwind in the US dollar shorts is leaving commodities come under pressure. You can see the commodity sectors are all coming under pressure today. Let's have a look what they're doing now. See, we've got, materials down 1.9%, metals and mining 2.13%. Resources 1.95%. I mean, it's pretty much red across the board. Bit of an unwind and risk today on our market. You got to remember the ASX traditionally, they just creep up and they're happy to come down pretty quick. So we're a very risk adverse market on the ASX. We haven't got anywhere near the all-time highs. Our all-time highs, we had a sell-off, and the rest of the markets, the DAX, the German market, has got back up. US is all back in new all-time highs since COVID's come through. And we're the ones with the least problems. So, I think not financially, you'd like to say, but economically, we're probably in a much better position. But we are very tentative to creep our way higher, to get back up to those highs where other markets haven't. So, if there's going to be a sell-off, that will probably come down hard because everyone's racing for the door at the same time. Which I don't think that's going to happen just yet. But yeah, that's a daily chart of the ASX. If you can see, we've had that big sell-off, and then we've been very tentative on the way back up again, and we still haven't got back to the highs above 72 or thereabouts, above 7,200 on the ASX 200. So we'll see. I mean, it's pretty much on a daily chart. You can see that sideways pattern, and that's just what we're looking at on the 30-minute chart. Same sort of thing, bit of a sideways pattern. We get some selling into the 67.50. Worst case scenario, I would expect at 66 these lows to hold up. These lows in here to hold up just below 6,600. I'm looking for this to be a higher low because I think even though we've got a bit of a sell-off today, I think the momentum's still to the upside. I think we might have a little thrust higher. I can't see any reason why, if all the reasons why the market's going up, nothing's really changed. They've got the stimulus. They've got vaccines. Vaccines not coming in as hard as what they thought. Sorry, that it's going to be more of a delayed process and potentially what the markets thought, but they're still coming through. I think the dynamics are changing in the US, obviously, with the new government. I also think everyone was sort of worried about inflation, but that's getting knocked on the head, in the near term anyway. So you can see that's why bond yields, I think that's more why bond yields have rallied a bit, dropped a bit. Not so much because of a risk-off tone. While in the US balanced, I think people can talk about a risk-off tone, maybe in the equity market, but I don't potentially think that that's what's happened in the US dollar and the bond market. Bond market was yields rallying and bonds were falling because of the anticipation of higher inflation with everything that's happening. But they're probably, we're not going to get back to the norm anytime soon because of the delayed effect of the vaccines, meaning that bond yields come off, bonds rallied a bit. Like I said, not so much because of a risk-on tone. I mean, if it was a risk-on tone, you get a bigger smacking into the indices, into the US markets, but there wasn't. And I think a lot of that comes down to that long weekend and people just not wanting to hold too much risk over the long weekend anyway, because you just never know what's going to happen. And we tend to get that Friday selling anyway, let alone having a longer weekend. But it's just flowing in a bit more into our market today, which is unusual. Well, not unusual, but it's a bit of a shame. So we'll go over and look at just what's happening in the overall markets. So my view, we are coming down to that 67. Where are we now? 63. So we'll see if that holds up today, that inside level. We'll see if this 66 holds up today, 66.60. If not, I would expect a bit of a flush through and bounce back, if anything. But I don't expect it to power through. Drop another 50 points. Because if it's going to go through, it's going to go through in a screaming heap. I wouldn't expect that to finish strongly 20 or 30 points below that level, at 66.30. So I'll just look. We've got to keep an eye on that. It is sort of dropped quite hard into that. We might start to form a base into the close and start to drift away back up again. Something like this, pushed into it, drift back up, and may get a couple of days back up again. Wait and see. So let's go and see what we'll be looking at, focusing on. Really, it comes down to the US dollar. I'll get that. I want to get that in a bigger picture start. So work away sort of on the daily and work away backwards. So that's what we're seeing. So momentum has pushed into this zone. You can see below 89, say 88, 88 and a half to 89. You've got this previous zone. It was way back in Feb when the markets, lack of a better word, pooped the pants. The US dollar got hit, and that's that initial sell-off when the markets didn't know what was going on. Then it became that safe haven by the US dollar. Once you know it's COVID that's hitting the market, and then US dollar just rallied from there. And then we saw this sort of, sorry, I'm way ahead of myself. That's back here with that initial push down and push back up. So this is way back in 2018. So that big sell-off as a devalued US dollar with stimulus has pushed that US dollar all the way down back into this zone of 2018. So I don't know why I was talking about that being a COVID case. That was not COVID, it was up here. So you got that initial sell-off and bounce back up as a safe haven buying, and we've just come and taken out those lows, which I don't think a lot of people kind of expected, especially the way it reacted back up again. And that was that it? Yeah, so Feb, March, it was coming off and then hit the lows and then shot straight back up again. And then we've been selling off since. So once we started to get this action here and the market started consolidating, I think that's when people were factoring in, or any currency traders, your bigger funds were factoring in. That's when that sort of US dollar short started, began. And you got chopping around here, powered down, popped back up, lower high, continued to find lower highs, pressuring the market down. So the market has been extended since about November, and we had that push down into that zone. So we've got that reaction up and off that level. Short-term resistance, which you'll see, is just this level coming through here, and whether we're going to bounce through that or we're going to react off this area here, which we'll look at it in just a minute, which is around the 90, 90 and a half, 91. Maybe if we're getting it to 91, I think that trend down's broken. So there's a bit of confluence here. We're looking for confluence in resistance zones, market stretched, a bit of momentum and everything. So on the daily, the momentum's back up. We could find that it is getting stretched, you can see by the stochastics. So anyone that doesn't know ALC will do. When I'm talking stochastics, I'm talking the power of the move up or the power of the move up, sorry, the move down. Okay, so it's a pressure, more of a pressure gauge than anything else. It's not. I don't use it as an indicator to buy or sell. I use it. Okay, if you're finding lower highs, coming into play, you've got lower highs here. What's happening with stochastics on a pullback, which you expect? Okay, this pullback price got lower than the last time it was up in that overbought territory. Okay, so it's a pressure gauge. The pressure of buying has pushed the market up, but not as much as before. Okay, so sellers are still in control, and the market heads south. The same reverse on the upside. So I'm using that as a pressure gauge. So you can see that buying pressure is being used up. That's what I'm sort of looking at now. Last time, we're up here. Buying pressure is used up. Potentially, we're going to find, with respect to stochastics, some selling starting to creep into the market. But we'll just have to wait and see. If that's the case, we might extend it back up to 91, push back up through 91 on the index. Maybe this is the level we'll have to keep an eye on. And that's that longer term trend down to stay intact. And it might be enough to squeeze out enough of these short sellers. Anyone especially short had been shorting or US dollar equivalent, so they're buying the euro, because of the US dollar, buying the pound, buying the Aussie, whatever it may be, selling the yen. Sorry, US yen. So buying the yen, selling the US dollar, US yen as a pair anyway. Get what I mean? The latecomers are the ones going to be squeezed out. Anyone that's been selling when the US dollar is above here are still in profit. So it might be enough to squeeze, you push through this zone, which we'll look at. We'll just drop it down to an hourly. Push through this zone, which is around 90, 90.5, 90.7. We just opened up today above that, and now I reckon we're going to drift lower, because until we get through to the US session, potentially the US, there's a lot of action in the US session, obviously, and maybe European session, we might get continuation of that downtrend and might get supported off the MAs and start to lift again and really start to power up. So if we get through this zone, you can see it's had a bit of action through here previously. If we get through that convincingly, without much of a pullback, we could be looking up to 91.2, for instance, okay? But still, this is just a shorter term trend down, and that's the longer term daily trend down, okay? So if we dare push higher, there could be that grind back up to this level still and find that confluence of the continuing that daily trend down. So it's got to keep an eye on that US dollar, obviously, because it's going to affect things like commodities, gold. We'll just have to look at that. So long story short, I don't have a bias. Bias is up. It's got to be up because a lot of shorter term trends been up. But this is the level that I'll be watching to see if some selling come back in off that level. We do a bit of a flush high, which we've done, and where there's some selling come back in, we get a lower high and we work all the way back down to 89. Then commodities are going to come back into play. You got your copper, oil, start rallying again. Gold might find some buying. So there's a few things. So if that's the level that's going to come into play, what is gold doing? Gold has just flushed that support on the open today. We're looking at this level through, was it 1820? It's flushed that level here and it's bounced back. Doesn't mean that that's going to hold. It just means that stops have been taken out. So really, you'd be looking at two things. If you think it's going to hold, you want to see another push down and then get a higher low coming into play. They pop down, shorts can't continue, and all those shorts get squeezed out. And then we start to look at shorts squeezed out of this action on the way down. And then potentially there's a bigger flush of that level, 1820. If not, you get more of this action, start to head down, and then you get lower highs coming to play, then you're going to get continuation, okay? And shorts are still in force, and they're looking to take out that, and that's a key level that it really struggled at 1860. So I think in the morning report the last few days, I was looking at that 1860 level. We did get a push back up there, but it wasn't, you don't see the strength, as in strength of selling. It really unwound there. After we get this lower high coming to play, really started to unwind, and that push back up, a bit of vigor, not too much, then bang, down again. Okay, we've got this higher low that come into play here, and then we did pop back up and selling straight back into that level, and then we flushed this high low. Okay, then we grind our way back up. So the fact that we were grinding up through this level, well, the last few days, we're grinding back up here after all these actions that come into play, especially after you broke, which you'll see, broke through that support, you start to grind. It doesn't give you confidence for the long side. Well, it shouldn't give you confidence anyway. If you're a technical trader, shouldn't really give you confidence that we're going to break up through 1860. All right, the way you're grinding, because if you're a bit of a grind like that, it's buyers are coming in here, they're pushing it higher, but there's still some sellers knocking it down or averaging up, if that makes sense. And then lo and behold, started the US session, bang, US dollar rallied. Gold just, we got a lot of action on the long side here. There would have been anyone buying off the support or buying it a lot higher with stops below have just been cleaned up. Okay, so you got to remember that kind of action when it plays out, just so you can see it, you can identify it, and really don't have your wrist too loose, because you know you're going to be a target for a stop run, especially below a clear level like this at 1820. You know that's not just stops from this sort of action recently, but stops potentially way back here. Don't know why, but maybe people having the stops there, they bought it off that level, they let it run up, they expect it, okay, they've sat through this pullback, we're going to run back up, have to weather the storm, stops below, smashed, they've seen all this profit evaporate, but the market will wash out levels, key levels, or not so much key levels as such, clear levels or obvious levels. The market will run. So if it's wanting to protect this level, there's sellers starting to protect that level, they're probably going to have a bit of a stop run through that level. And that's what's happened on the open today. So we'll see if that bounces back and we get the deeper the correction up, when we do have that pullback, I'll be looking for the higher low. The fact that it is getting a bit deep, what I expect, if we hold up here and start to find some seller, a couple of red candles come in the next few hours, or, next into the European session, we might get another run lower. Okay, and we can see if we can work off a lower high in the lower time frame charts. So that's gold, oil, and that. Sorry, just back to gold before I start to run off. That flush at that level it makes sense with the flush on the US dollar as well. Okay, US dollar into that resistance zone. So if the US dollar backtracks, gold might bounce, and that's just a good flush. So the idea of that being a flush and we get a higher low come into play would make sense if you get that US dollar backing off from this zone, starting to come back into below 90.60 and even lower. All right, so crude oil, just let me know where we're at. Any questions, just feel free to throw it in the chat as we're going. Crude oil, struggled up here, got sort of essentially a double top up here. We've taken out the most recent higher low, which was around 52.20, 25. Took that out, flushed it, bounced back, got some more selling pressure. I'll just drop it down to a 30-minute chart because I like the 30s better. More selling pressure just in here at around 52.50. Come back in, and that was on Friday night. So we've got markets, it's open today. We flushed lower as we got that US dollar gapped up on the open. So really now I would suggest that the fact that it's kind of this leg up, we're starting to correct, which is fine. It's not a be all and end all. The market's got to go through those phases, expansion, contraction. When we're talking about expansion, we're talking about this kind of thing, momentum up with higher highs, higher lows. Once it starts to fail, you're always going to get those areas where you run out of buyers, essentially, and you have to start looking to squeeze out some of those late buyers or see how strong the conviction is of the buyers. Okay, and at the moment, that's what we're testing. Right, we've got that pullback there. It should have run up. If it was a strong market, should have run up and through to, what's that, 50, 55, 54 and a half, 55. Didn't. Second time we tested, we started to fail off this zone, and we're backing off now. So when you back off like that, you get those double tops. The first thing you're sort of looking towards is the most recent higher low, okay, to see what happens there. And as it plays out, we've broken that. So there's a few longs that we'll be watching that closely to see what happens, see if it starts to hold up. So if you're going to go out to sort of longer term, I just want to see just go back to a daily. Actually, the daily is going to show you this rubbish, isn't it? That's that breakout level on the longer term charts. So we're sort of looking at this breakout. So I'm whipping around. I'll go back to, it's that big wick when we went below zero that's really confusing the picture. But this is that breakdown. When we started to break down through a key level at 51, or 50 and a half, 51, that's that zone through there. We broke through there. We whipped through, we got that massive smashing below zero when the whole world was falling apart, and bounced straight back again. And so that's that level there. So potentially, Mike, what I would expect, the overall longer term picture for it to start smashing through that zone, the longer term picture is going to look like rubbish. It's not. We're looking to coming out. We're not going into coronavirus. We're sort of coming out the other end. We've got viruses coming into play. Sorry, not viruses. Vaccines coming into play to support the market. You've got dollars supporting the market. Um, so that just means that the world's moving slowly towards normality, you would guess, apart from the US dollar, massive US dollar debts. But we're working towards normality, meaning demand is going up, supply is going down in crude. That's the longer term picture. So if you're factoring that longer term picture, that's why I would sort of suggest that we're correcting this leg up. Where could we find we might wick into this zone here? Spot finding buys back up. So the more buying that starts to lift into that zone, the more likelihood that's going to be the correction, and we start to look for another trend back up, another leg back up, something like this maybe. Okay, so the crude will do it a lot, wick into it like we did here, through here, wick, bang, and up we go. So I'll be watching that. So if it holds up here, all you really want to see, we start to wick down, and then we start to, like this, we break the most, not really in here, is it? Once we break that lower high, it's not really there either. I'm trying to think of a zone. Oh, here we go. Maybe in here, or once you start to hold it inside high or low, then you know that momentum shifting to the upside again, and that's what we'll be looking at. So crude oil, like I said, I think it's obviously with that US dollar last few days, last few sessions, US dollar bounced. Good opportunity if you're long crude to think about taking some profits. So it makes sense to me that way. I don't think we're going to have this massive smashing just now. And like you said, the bigger picture is with a weak US dollar and bond yields really low, near zero, and pretty much everywhere. Where are you going to put your where are major funds and major money flow going to be? Probably continue to be in equities, whether they're overvalued or not. I think that's kind of the play. Still, I don't see that's changed just yet, but we'll see. It could be buy the room, sell the fact. Once we start talking the vaccines coming through and we start to see improvement, everyone starts to book some gains and starts to flow into other areas. I don't know what, but maybe just major rotation to equities, which would mean that probably sideways action at the best, at worst, sorry. Copper was a bit the same, not much to look at there. Bit of a sell-off because of the US dollar, but longer term, I might just clear this. Longer term, that trend is still up. Major levels through here at around 3.5. We're still up off that. We might just be retesting. You can see this zone through here. So, and if you get that bounce in the US dollar, so the drop back in the US dollar, we've had that bit of a spike higher, and then we start to get some selling come back in the US dollar, remembering that there has been some sellers, the number of short positions are building, have built quite substantially recent days, which doesn't make sense when you look at a chart, but if that's the case, they're building, averaging in on the way up, then there's only a matter of time when it runs into a bit of a wall and we get some more, another push down in US dollar, which would mean this back up, crude starts to lift again off that support that we just described. Like I said, copper off this support starts to hold. Whatever else we've got, your commodities, your basic commodities, gold starts to lift. Maybe that flush of gold is what we're looking at. The play is just a flush, and then we bounce. So all these sorts of things are starting to factor in, and then you start to get equities run again, which is just good for commodities, good for Australia, good for what's just been beaten down the last few days. So yeah, that's pretty much what I wanted to look at. So my thesis sort of still revolves around that US dollar until we get a massive unwind of short positions in the US dollar. I wouldn't be looking too hard into be too concerned. It's a bit frustrating when you see a good day on Thursday and then it unwinds on Friday, which we had on our portfolio. Still, there's a few that are sitting pretty. What do we got? So a negative day today, but MGX, we're up quite well. We took a partial on that. Still in our favour. CVN hasn't moved today. It's actually not looking too bad. That's, I can't even see Carnarvon Petroleum. IVC, which has been chopping around, that sideways action, I think the weekly is a bit stretched here, but I expect that to break. When the fact that it's consolidated in this move up, it's consolidated sideways, sooner or later, you would expect that to lift and break through $12. So that's what I'm banking on that one. CGC, that retracement I don't like, so I've got a feeling we could cop it on that. We'll just have to wait and see. I mean, that trend is up. GDP, rest domestic product in China just saw a pop up. They just had some news come out. 6.5% year on year versus 6.1% forecast. So look, we'll see. So CGC is a bit of a bummer. I like everything to be perfect, but it's not. Bit of a flush today, which you would expect. Your weekend's flushed out in the open. We'll just see that trend up continues. I liked the action I saw on Friday morning, and then we got that sell-off. So, if all that works out fine, we could start to lift again. And IPL, we're up on that from 60, was it to 45.5, I think. So we'll see that, again, I like the look of that. That's heading higher on the weekly, heading high on the daily, sticking to the MAs. We had a bit of a flush here, so I would expect a little pullback run, give us a chance to take some profits on that. So that's it. So we've got a few stocks we want to look at. So really, for me, not much has changed. I think a lot of that profit taking on Friday and Thursday has been due to the long weekend. We know what's happened to the US dollar. All in all, I wouldn't expect the US dollar to start rallying, considering that it's a bit of a basket case with the amount of debt that's flowing through. If it rallies, I think it'd be on a safe haven. If it's a safe haven, it means coronavirus cases have got well and truly out of hand. And what does that mean? More stimulus. So all in all, I don't see a lot of upside in the US dollar. I mean, it could change, obviously, but for now, I think we're sticking to that same sort of thesis, that short US dollar trade. It looks like, stronger commodities for the start of 2021, which should be beneficial to the Aussie dollar and us. And if actually we just go back to the Aussie dollar, and that's another one that's sort of on support. So we're just finding this uptrend here. We're just, maybe we're starting to get a bit of failure here. The market's starting to go sideways. Happy to go sideways if that's what the play is. We don't get a big sell-off and unwind to these longs, but more of a sell-off after we broke through that high. Just go back to the daily, show you. Through this, it's not that level. So this is just a little inside level, okay? We've just pushed up through there, maybe retesting the 76.50, 55 zone, and we're starting to lift off that level. And if we're going to lift, we're going to push up to 81. That if that's going to happen, we're up towards that 81 area. That's a weaker US dollar. And the same old play with regards to US dollar, with regards to equities, with regards to commodities. Okay, so a massive unwind there, not a good thing. But we'll see. Buy the dips. Maybe that's the mentality at the moment, and that's what's playing out. Longer term, you've really still got this major uptrend. Maybe we have a bit of a pullback. Squeeze out some of these late buys in here, a bigger dip, and that would probably play into a bit of a pop on that US dollar, into the longer term resistance that we mentioned before. All right, so let's get into looking at some shares. So we've got a couple from Mr. Can't Hit the Shot. Anyone else put in, if you want to look at some shares, if there's something you want to look at, it could be anything. It really doesn't bother me. I'll find some sort of opinion on it, put it into the chat, and we'll take a look at it. So we've got a couple, ALC, NCZ, and VHT. Start with ALC. ALC, just glancing at that, it's not looking too bad. And that's purely because we've got that sell-off here. We've got these lows at 10 cents. The next grind down. So that's obviously during Feb, March, when the market's completely unwound. And then we've got, maybe it was a bit tentative there, but it started to pull up at 12 cents through there. So I'll just get my drawing tool. Just keep an eye on the SPY at the moment. Still finding that weakness come through. Where is it? Here we go. That's a bit weird, isn't it? All right. PAB, SO4 will do. So we're just looking at the weekly. You get an idea. You've got probably level through here, through 10 cents. And that's what it retested. That spike through, and it's when you get that pop up. Okay, it can easily, especially with 10 cents, because don't forget you go from below 10 is 0.01 increments, above 10 is 0.05. So half a cent increments. Okay, so you go from 10, 10 and a half, 11, 11 and a half, and so on. So you do get it start to run a bit high, but the fact that it's come back down and then it held roughly 10, 10 and a half again, that's more the level for me than this level up at 14. So you can see we powered up through here, and that was the level on the pullback in Feb March that it's retested. Okay, retested that zone through there through 10 cents, and we started to, just looking at this weekly. If we draw that up, we're starting to lift. Okay, and it's this here that I'm looking at, that kind of retracement there. You can see it held quite nicely. Even with this pullback, it started to congest in here, and then boom, up we go. So really, the high lows in here at 12 with regards to 10 cents, holding a high low. We're just going on a bit of a pullback mode. You can see clearly it's just coming to these previous highs just in here. Okay, when we retested it, probably fell a bit short, but just failing off that level. So what you'd be looking at on the daily is to see we can hold here. You don't really want to see it go through 18. If it flushes and bounces straight back, so say today, pushes below 18 and then finishes just back above it, it's a bit of a stop run. Anyone that's been buying with stops, really tight stops just below that level just got kicked out. And then it might be the juice to buy back into the market when it starts to run. But yeah, you want to see this hold those MAs, and you want to see it stick that level. I wouldn't be buying it here. If you're long, your probably risk is going to want to be under around 11 cents, depending on where you bought it. Yeah, but my risk would be held below there, especially after seeing that, because you know that you've gone that expansion, little bit of expansion there, and we're sort of at the early stage of a potential longer term trend up. Right, looking back at the weekly, that's your breakout really, and this is your first pullback. So if we can settle on that 18 zone, even 17.5, 18, if we can settle there on the weekly MAs, then that makes more sense to me that it's going to hold up around that 18 level. Okay, so if I was looking to buy this, I'd probably be looking more to buy it through it, especially if you get a flush and bounce straight back, looking to buy the break at 20, and then your risk is just below, around 17, so you've got minor risk. If you're long already, you're waiting for that. You're waiting for it more to attack 20 and even 23 before you raise your risk to around 17 there. Okay. So we'll see how that goes. But either way, to me, it's looking like it's early stage of potential run up. If it starts to break down here and you get back down to 12 cents, it's not such a good sign. Through that, yeah, I wouldn't be going long at all. So I'll be, for me, looking like from outside in, I'm not involved in this stock at all. I'll be waiting, for those key things to happen. I want to see this hold up. You want to see it hold up as a high low. If it doesn't hold up as a high low, it means that it just simply means that people are starting to sell into it. And if they're starting to sell into it, why? And no one's buying it, it's simple. You don't want to be part of that action. All right, but if they're starting to hold it, it means it's the conviction of buyers is greater than the conviction of sellers. And if that starts to weigh, you'll start to see that shine through, then you want to start to get long as that level starts to hold. All right, so that's what I'll be looking at. ALC, NCZ. NCZ, it's more rangy for me. You go back to that weekly, we sort of got this, just drag that back in there. This big move down, we've got this move pushed down to 5 cents, we've popped back up. You held this inside level and we're back up. So we're back up into this zone here at around highs of 26.5, say. Is that it? 26.4, say 26.5. And we got back up there, just through there, but we failed. The next day failed, back through there, failed again. So look, it is popping up, but if that was going to go, what I ideally want to see, for me, say that's a level, you don't want to see it touching the level, and then pull back and touching it, flush it out, pull back. That's not strength to me to get in, enough to get in. I want to see push through, and then I want to see what happens in the first pullback. If it pushes through and it's a stop run, then you might get this kind of thing happen. But if it pushes through and it's not a stop run, you can see the volume start to increase, and your first pullback's met with some more volume, then that's where you want to get in to something like that. You know that you're on the right side of the action. You know that the price it's starting to run, because the momentum's with the buyers, not the sellers. The momentum's starting to be with the buyers, and then you're buying into a stock that eventually is going to essentially going in your favor, as opposed to, buying in here before you get any break, because you've got no confirmation that it's going to go higher, or buyers want to push it higher. Okay, so for me, I'd be in a bit of a, there's my mouse gone, here we go, a bit of a holding pattern for now, which this sort of chop through here is not convincing at all. And then you can see that the MAs are very much, yeah, they're going up. The 20 is above the 50, but it's not convincing. Not convincing like this pullback, or let's just get let's just get back into this level. I'll show you what a good trend up is looking like. That's kind of thing. You get shallow pullbacks, hard rallies, this kind of thing. Move up, shallow pullback, consolidation at the highs, hard run up, as opposed to, you got the little pop through the high here, pop through the high here. It's not convincing at all. So just be sitting and waiting on that one as well. VHT, much of the same. That action there since pretty much March has been sideways. Okay, so that's rangy. If you're wanting to get long, that you're desperate to get long, I'd be trying to do it near 130, just because that range action, unless it breaks out. If it breaks out and retest and holds a retest, then it's starting to get some momentum to the upside. But until you don't know what's happening there, why it's ranging, but it's been pretty much going sideways, within that range between 130 and 150, say 155 for the last close to a year now. 9 months. It's not close to a year, is it? Close enough for me. Okay, does that make sense? So that's VHC. I wouldn't be looking at just yet. Yeah, the weekly is probably the one to come into play. That's showing that rangy action as well. We start to break up through 160. Yeah, it could just take off. But I think to convince people, it just means that everyone's looking at the same trade. If it's just going to go, everyone's looking at the same trade, meaning buy the breakout and that's it. But not everyone's going to do that, and people are going to build a position. So you might get the breakout, has a bit of a flurry higher, and then it stops because there's not enough momentum with it, or there's not enough buyers to join in action. They're waiting for that pullback. Pullback comes, it gets held at a higher level, and then you get that more buyers, and that's going to trigger more buyers in action, and probably people who are building a position that jump in to some of the position on the breakout, are breaking through this level, because not convinced it could just be a flush. If you buy the break at say 160 as your buy stop entry, where's your stop going to be? Your stop loss. So when I say buy stop, I mean you enter on a stop loss order. Does that make sense? It's not really a stop loss order, but it's just the same thing. You buy on stop here, so you don't buy until it hits 160, triggers a market order, bang, you hit the market. So you're buying at 160 or above, but not below. Once that trigger in action, your stop loss, where's that going to be? It has to be below 120. Now, if there's just going to be a bit of a stop run, it's quite clear that you got that high in play. Any sort of short stops that might come into play, or that people are probably going to jump in with a break of that level, flushes them in to the market and squeezes them back out. So that's the difference of buying now than waiting for the first pullback, and find that first pullback is supported with some volume as well. And then that's what you want to see, supported with volume. Something like this, potentially you get a bit of flush higher, pullback supported with some volume, the momentum's up, and then you can start to jump in. But at momentum, at the moment, it's pretty much sideways. It's even between the buyers and sellers. All right, so we'll just keep an eye on that one for now. What have we got next? VHT SO4. That's O4. Why won't that come up? It's O. SO4. Yep. Salt Lake Potash, is it? Yep. Is that Joseph? Salt Lake Potash, I'm guessing. Okay, so that to me, you got a big sell-off here. Tried to go up. With the way the market was, it probably should have gone a bit higher. We've got a lower high coming to play, another flush down. So for me, it needs to build. This needs to build as a major higher low. Potential on the weekly. That weekly is down to me. You've got, forget about that kind of action. Let's just get rid of that. Okay, so you've got this market pushing up. It's come down. We've taken out these lows with this move down. Okay. Yep, it could have been overextended, but the fact that we started to run into trouble at 60 cents and we've got a lower high come to play as opposed to this high, it means that no one's waiting, no one's enthusiastic on that. And anyone that's been long up here is now getting out. Okay, if they're going to get out and push it down, it means there's no buyer standing in the way. Okay, so for me, you really want to see that. I want to see that pop up. I'm not going to buy that unless I see a high low come to play, something like this, sit on top of the MAs. I'm not going to be buying it down here, especially looking at that weekly. I want to see, something like this, pop up above the MAs, consolidate, holding above 20 EMA above the 50, and then looking for that, continuation trade as opposed to trying to buy the bottom. Because when you're trying to pick the bottom, you just, unless you're Nostradamus, you don't know where the bottom's going to be. And it's not a winning strategy. Yeah, it might have won when you got the big sell-off in April, when it was, and you started to buy on those lows. But if you're inclined to do that, you probably started buying well earlier too, and you've taken a lot of heat, and it's, you got back to break even. Maybe you're up now, but it's not a winning strategy. I don't think longer term. So yeah, I'll be buying when the outcome's a bit more known, and you're trying to buy in those hard spots. So you've got, your first pop up here, you pull back, so you're pushed into this resistance zone here. When you start consolidating that move up, consolidating sideways, there's a good chance that next break is going to be met with a lot more buying, and you know where your risk is, and you can get a good positive trade on your hands. So that's like SO4. So for me now, I'm steering clear. I would steer clear of that one if I was looking to enter. So anytime I talk about something, it's more or less from the point of a new buyer. Okay, it's not if I'm holding. Okay, if I'm a new buyer, I wouldn't be looking at that one. I think the weekly trend's down. MAs are starting to expand on the downside. It doesn't mean it can't hold up, but they are, the weighted numbers is to the downside. Go back to the daily. Same. You're fighting the MAs, you're fighting the bulk of the market. Okay. SO4, PAB. That to me is a lot better. Okay, so Joseph, you got that too, I'm guessing. Just looking at it, eyeballing that sort of move up there, you expanded there, you weathered the storm there. So it's sort of your first pullback, and it's got held the MAs, held so, and then we had that thrust up. And just today, in a weak market, it's up 16%. Good, half decent volume, 7.5, nearly $1 million, 750 grand. Good little spike in volume. So you got those sort of thrust through that level there, was at 2.6, is a good sign. On the weekly great. That was your first pullback on the weekly. It met with some buying just below 2 cents, and now we're starting left. So break a 3, you could probably estimate we're going to look up to 4, even higher. And the fact that we've had this good little spike here, it's back in 2018, big sell-offs, a lot of heat's coming out of that market, all the way down to 1. Maybe it could have held up at a higher level, but then we got the, I was going to say the GFC. Then we got the coronavirus kicking in. It's really muted that any sort of bullish action this year, last year, but still it managed to hold that higher low. Okay, so on the weekly, the goods it's looking good. You got some volume, you can see just down here, starting to pick up on that lift, and again, pull back, volume eased off. You probably see it on the daily. This pullback here, the volume's really come off, and then when it started to lift again, volume's starting to step up again. So for me, that looks really, really good. So that's nice early entry. You can put your risk below 2.5, 2.2 cents, even below 1.6, a bit wider. Because it breaks back down from here if you're long, or if you're going to get long on that break of this high, which is about now, isn't it? High 2.88, give or take now. High 2.9. Yeah, so just say you bought it now because it's broken this high. Stop below, just give it a bit of a wide berth, give it some room, and then see how it goes. But definitely, I think that is on the upside. It's got all the makings of a good little trade. PAV ELD, elders. Bit of heat's coming out of the action. So really, when you see this kind of thing, it starts to get that little minor double top up here at 12 bucks. I'll just draw that up. So when you're getting this kind of stall here, if you were watching it there and you sat through this pullback, consolidated, okay, you think you're great. Sorry, I don't mean you think you're great, but you're quite happy with that move. It's showing some good signs. It pushes back up, then it fails for the second time. That second time it fails makes it a minor double top. And like we said before, it starts to attack the most recent high low, which is roughly around $11 mark. Okay, and it did that. It pushed through, retested from underneath. Support becomes resistance, and it had a deeper correction. So all you're really asking yourself now is this rally back up here, is that is that a deep enough correction? And we're looking at this leg down here. So that's your uptrend, maybe your weekly uptrend, pullback. Have we or have we not started the next longer term uptrend? Okay, so that's the way I'm looking at it. On a daily basis, where we're coming into that $11 mark, we might see some more resistance. We might see we call it a retest fail, retest that level at 11 and fail again. And then if it's going to fail again from here at around 11, double top, essentially another double top, you call it at 11, you're looking back down to 950 and below. Okay, so on the weekly, look at the weekly. Okay, that makes a bit more sense. You've got pushed up, it was extended, a bit of heat coming out of that market. if we can start to pull back and hold 1050 or around that mark, that means it's on a weekly basis, it's a higher low, and then you would be looking for a move back up through 11 and then to 12. Okay, just go back to the daily. Oh, where's my mouse gone? Mouse disappears to the other computer. Got my laptop next to it, as you know. It shoots across the right hand side, and I've got to wait for it to come back again. So like I was saying, if this little leg up here, if we pull back, because you're sort of up at this zone through here. I'll draw it up for you just so it makes sense. Pete, you know what I'm talking about, I'm guessing. So we just identified those levels. Okay, we've got a level that it's reacted from. You know that it's reacted here, off it, went through, chopped around here. We reacted back down off it again. So we reacted up off it here and here. Then we pushed through. We finally pushed through a bit of a. So it's like the market wants to go through. Got supported. Okay, sellers took their foot off the gas a bit, come up to here and started to fail and went straight through it. So anyone that's buying here and here just got stopped out. Okay, essentially, if you're buying it there, the way I look at it, it breaks that level, you want to be out. Okay, we break that level, retested from underneath and failed. So that, like I said, support here now becomes resistance from underneath, heads back down again. We took out this low with this move and we grinded our way lower. So we got down to, what was it, 960. So now if it was really weak, you would have expected after this candle, got some weakness and we go back through 960, but it didn't. It's come all the way back up to 11. So we just got to keep our eye on that $11 mark. If we start to do something like this, we get through it, up and through it, you're looking at the reverse of this, retest from underneath. So you push up, retest, go long, essentially something like that. Okay, so it's just a reverse of what we did here, retest, shorting it and seeing where it goes to. We flip that around. We push back up. If it gets through, we want a significant, don't want it to push to 11.10, 10-cent break. That's not really a break. You want it to push through significantly like that. I'm starting to mumble a bit. Sorry about that, guys. Too much in my head that I'm trying to get out of my mouth. It's just not working. All right, but you know what I mean. Okay, so if that's the case, but if we start to fail just below that and we start to take out 1030, say, for instance, we could be looking to a test back down and break 960. What I would like to see is more of a higher low build. I wouldn't mind seeing that becomes a resistance again. We fail here. So you got buyers will be watching that, may be forced to get out, but then it's supported somewhere, below this 1030 mark, maybe 1010, 1020, or even at 1030, it doesn't matter. But if it gets supported here, then we sort of get that chopping around here, that consolidation through that zone. And then if we start to lift from there, then I would expect that will break through $11. And if you buy the break there, you know where your risk could be because your risk is off that higher low. So what I'm saying is that the market's pressed up here, we start to come down and we do a bit of this, okay, then you can buy here, buy the break there, but you know where your risk is going to be, and that's your higher low you're working off. Okay, and then you'd be looking up towards 12, probably potentially higher. Through 12. I mean, that's going to be next port of call. We might get some struggling up there. Market's still heading down by the looks of it. We're not happy. Anyway, Elders. What a small parcel tested this morning. Okay. See how we go, mate. We'll keep an eye on that one for you, Pete. And last we get on to is VOC. VOC, you got that, John. Yeah, this section looks good. What you're getting, you can see that expansion. It's clear expansion when you get those really solid green candles one after another. Okay, on that pullback, MAs are up. Got a flush through the MAs. That's fine. Bang, straight back up again. Hard to enter if you're looking to enter there because you're just kind of looking at that break. Just in here, I'm looking at a little pullback, but yeah, either way, it's expanded high. You've got expansionary high, expansion high, consolidation. Couldn't get through here. Okay, pull back, test this level, flush it maybe. Don't know what the low was there. Low was 36. Lows were 39. Held up. So that low there held up. So when it holds up and starts to get a couple of green candles in an uptrend, you could have taken that a bit earlier. You could have taken off a candle entry. I like to say a higher high or your second candle high, meaning green candle, next day you buy the break of the high and then you got your stop below, anticipating that level above is going to break at 380. Okay. I'm talking about this. I'll draw it up. I'm looking at this level. I got sidetracked again. So I'll draw out what I'm talking about. It's just a way to enter. It's not hard and fast. I like my high lows, lower highs, all that sort of thing, as you'd know. But just realizing there's other ways to enter the market. So what we're looking at, it's an uptrend. You're looking to get in. You've got that phase. Essentially, it's what we were talking about on the last stock. What was that? PAB? No, Elders. You've got Elders was, go here. Elders potentially we've got this coming into this zone. We're going to get double top. Same sort of thing we could be getting on VOC. We've got this low in here. No, sorry, here, I'm talking about here. Low here, double bottom here, but still it's holding. There's my little drawing chart. So that's the level. If you're looking to get in here, and you can see that the market's heading south, reacted quite violently back up again. I mean, you can get that candle. You could have taken the break the next day. I would like to take it, the second, get a couple of good days under your belt. You know that trend is potentially up, and we're going to drag in some buys. You can enter there. You can have your risk below the day's low, or you can put it below that key low, that level at 335. That's the way to enter it. Looking, because what you're seeing is that double bottom, that level at 340 is confirmed, and it's confirmed with some strength because it reacted savagely off it. Okay. So if you buy, something like this is a bit clearer because you do have your higher low to work off. You can buy the break there. It eventually didn't work, but that there is one way to enter. I like to use my higher lows off that level. There's another way, a couple of good green days, buy on the third, aggressively buy on that second green candle. If it looks like it opens and it goes through the high, you can do that, but it's just a bit more risk. So for the more aggressive the entry, obviously, the more risk is involved. Otherwise, your last step was to buy the break of that. I mean, in hindsight, fine, but you got quite a wide stop on that. This here, a lot clearer, and I think we've had that expansion higher pullback. You can see that grind down. We can see green, red, green, red, all the way back down. It's just grinding back to the MAs. Your level put in place here at 390. We reacted up off. That's kind of that level you'd be looking at. We're breaking up and out of that consolidation. That consolidation sideways is essentially a high low as well. We start to break up there. Probably could have got stopped you in today. If you're in that at 425, say, your stop could just be below this low, or you could put it below 385. Okay, simple as that. But either way, I think to me, on a daily basis, it looks kind of good. It looks set. It's on the weekly, and the weekly too. It's just starting to hold that, that uptrend, and potentially it's a matter of time before that gets a bit of a move on. Okay, you got a massive double bottom here too at $2, flushed it on the recent sell-off in March, held. We're starting to lift in, so we could be looking for that. Getting involved there could see you move back up to retest these highs at 5, which makes sense here and makes sense here. Okay, so that's it. All right, that's probably, we've got through everything. So I'll probably call it a day there. It's been just on an hour, so I hope you enjoyed the first time back. I hope that makes sense. Now, if there's something that doesn't, please send us an email, support@tradesetup.com.au, and we'll get back to you. Okay, I'll try to clear up any concerns you may have. Got my ramblings. We're back in on Monday again, and I'll be getting back into doing the talks with Spotty, so keep an eye out for that. And feel free to follow them they're on LinkedIn, Spotty, LinkedIn, Twitter, all that sort of, Facebook. They're really good. The guy's fantastic. So good little source of information. But like I said at the start, if you enjoyed what you hear, it'd be great if you could leave us a like, help spread the word a bit. Give us a like. Anyone that's listening for the first time, feel free to sign up to us or subscribe to us on YouTube. No strings attached. Plethora of information there for you to try to make sense of what we talk about, or what I talk about time and time again. But yeah, thanks for joining me, and we'll speak to you again soon. We'll see what happens in the next few days. Cheers, guys. Bye.